Hey, welcome to another video. In this video, I'm just going to talk about market internals and direction and why you need it. The first one is the VIX, which is the fear index. It's basically telling you if the overall market is in a fear state or in a buying state. So VIX is the ticker. You need to add this to your charts. Then we have our ticks, which is the rising and falling stocks on the New York Stock Exchange. You're going to need to know this. And then your volume spread is advancing volume minus declining volume. And then last but not least, we have the TLT, which is the bond market. So if bonds are up, then that means stocks are most likely going to be down and vice versa. So let's go over to our charts. So what I do is I use TradingView and I add a new layout so I could just check on this for my market internals, kind of giving me a bias of what's going to happen for the rest of the day. This is on a 1 minute chart. I use the total put call ratio on a 5 minute chart. The put call ratio is also going to be an indicator that will let you know if investors are fearful or if they're buying. So if we look at this put call ratio on a daily chart. So when it comes to the put call ratio, anything below or anything around the 0.45 level means there's going to be heavy selling. Anything above, it's going to be heavy buying. Okay, so if we see anything above the 1, let me just add that in there real quick. Okay, so anything above the 1, we're going to be looking for buying opportunities. Anything below 0.45, we're going to be looking for selling opportunities. If we could see the bond market down here on the 1 minute, we can see the decline here, right? And then on the VIX, we see it trending up. So there's kind of a divergence there right now. And then on our NYSE, we have our volume spread. Okay, so this is letting you know if the overall market is in a buy or sell based on volume, right? So a majority of the NASDAQ 100 or the S&P 500, this one is for the NYSE. So all the stocks on there, this is going to be kind of a comparison of which ones are selling, if the majority of them are selling or if the majority of them are buying. Okay, so here we can see increase in sales. Then we see the VIX trending up, meaning selling, right? Because if the VIX goes higher, then we expect sales to come in. And then at the same time, we see the bond market going up. So our bias is sells, okay? And then our tick data, right? Ticks are going up above 1,000, right? So anytime we get a pull up above 1,000, we should expect it to be safe to sell. Anytime we get a pull below 1,000, then we should assume that it's safe to buy. But that's not all you need, right? We need to look at market structure and compare it with our market internals, okay? So if we look at the put to call ratio, let me just go over to this side. Okay. Anything above 1,000 or 1, sorry. Anything below 0.45. Okay. So these are both on a daily chart. If we look at above the 1 right here, you can see where my cursor is over here. It shows a buying opportunity. Anything below is a selling opportunity, right? So if we look over here, you can see we're below the 4 or 5. You can see the sells come in from here. Okay. So very simple. It's just going to give you a better bias on what to do, right? So we can see bonds starting to come lower, right? Bonds coming lower. Our volume is getting bought up, right? So most of the stocks on the New York Stock Exchange are getting bought, okay? And our VIX is starting to head lower, okay? Now the only thing is I would wait for our tick volume, our tick data to head lower for a buying opportunity. Okay, right now we're in between the mean of the 1,000 and the 0.45, so like right around here. This is still showing a little bit of buying opportunity till we get above here. So very simple market internals. You can read more about this through Simpler Trading if you buy his book, John's book, Mastering the Trade. Really good book. And it'll kind of let you have a better bias of what to do during the day.